and welcome to the First Brick Property Podcast, episode 11. My name is Cam. I'm the director of First Brick Property Buyers Agency. The purpose of the podcast is to bring a casual style show to discuss all things property, with education being the key. Our episodes will range from discussing a variety of topics to having special guests who can share insights into the property world. Whether you're a beginner or a seasoned investor, this show will be able to further your knowledge and really remove any barriers to getting involved in the exciting and fun world of property. Today I'm joined by my regular co-host, the better looking bearded man Henny Rojdi, and his wife.
Oh, hi guys!
Just sitting in the corner, doing some stuff. Henny, how you going?
Pretty well. Looks like it's going to be an interesting podcast today.
Yeah, we'll get some side commentary if we say anything wrong.
How are you coping with the quarantine and the lockdown?
Yeah, not bad. Just chilling. Just doing some marketing work and focusing on some other stuff. Yourself? Chilling with the kids?
Chilling's a good word for it. Let's stick with chilling with the kids. Why not?
That's cool. Before we start today, I've got a special mention for someone in Enfield in England who has listened to every single episode of our podcast.
From England?
Some guy or woman from Enfield town in England. Thank you for listening. If you ever need to buy a property in Australia, we're going to take care of you.
100%.
So with everything happening in the world, a lot more people, they're being forced to budget and look at their expenses more than ever before, job losses and redundancies and whatnot. And so I thought it might be a good idea to discuss some things that might help with, I guess, managing your finances and savings, and mainly for people that have a mortgage.
Yeah.
What I'm talking about is offset accounts. You're keen to talk about offsets?
Very keen.
It's a very interesting topic. It's actually something that we got in a lot of requests to talk about.
Yeah.
We did mention it previously in our loans episode. Since then, we got some emails saying, can we do a whole episode dedicated to it? So
sounds good.
Why not?
Yeah.
Let's save people money.
Yeah.
So I guess an offset is one of the most important features of a home loan, and can save you thousands and thousands of dollars in interest payments, as well as cut time off your loan repayments. Maybe we should start at the top.
Yeah.
And talk about what is an offset account.
Yeah. So it is a pretty significant feature for loans, and it's effectively a savings account that's attached to your home loans. So you can use it like a normal savings account. You can also get a card that you would just as a savings account. There is a bonus that it can even pay you interest, and we'll get to that a little bit later on. And they can also come with a credit card, and if used wisely, can save you money in the long term. So how does it all work?
Yeah, so pretty much an offset account does what it says in the name. It offsets the interest payable on your loan. So how does it do that? We'll start first by how does the bank calculate the interest that you owe. So if you have a $500,000 loan, 5% interest rate, whatever your interest rate is, what the bank does is they calculate that 5% on the $500,000 owing.
Yeah.
They divide that by 365 days in a year, or 366. And every single night, you get charged that interest.
Yep.
And then at the end of the month, they collate whatever's been per night for the 30 days in the 30 nights in the month, and then you get charged that interest.
Yep.
If it's a principal and interest loan, they'll add the principal segment to it. If not, it's just the interest. So that's what that's how you get charged. So how the offset works is it's like a separate savings account, like you mentioned, sitting right next to your loan account. Mm-hmm. And what the bank does is they look at your offset account or your savings account. We'll call it a savings offset. And whatever's in that savings offset, they will literally offset your loan by that amount and then calculate interest on it.
Yeah.
So I know I've just said a lot of words. Might be a bit confusing. If, for example, you have $500,000 loan, and then you have $100,000 in your offset account.
Yes.
The bank will calculate interest on 500 minus the 100.
Yeah.
Which means you'll be charged interest on 400,000 only.
As if your outstanding loan balance was $400,000.
Correct.
Yeah.
Yeah. So important thing to know with that is though, you can use your your offset account at any time.
Yeah.
So if you've got $100,000 in your offset account, doesn't necessarily mean you've paid the $100,000 off your loan. It's a separate account, like you mentioned, but it sits next to it, and you can access that cash at any time.
Yeah.
Yeah.
That's good. Look, there is one really important thing that you need to understand, and that is not all loans offer this feature.
Yeah.
So on a very basic level, if your home loan is variable, you can have an offset account attached to your loan where the interest owing will get offset based on the amount that's in the offset. Almost every fixed rate loan that I've come across doesn't offer the offset account option.
Yeah.
So that's a really important thing to keep in mind when you're trying to select what loan product you want to go for. Correct. So a variable loan, you'll be able to use the offset account. Fixed rate loans, pretty much every single one that I've seen doesn't offer the offset function.
Yes, you're correct. I was actually speaking to Ferdy, who was on our podcast.
Power loans.
Power loans, that's the one. And actually just asked him that question while we were talking. And he said he only knows of 2 lenders that will do it under extreme circumstances.
Yeah.
So pretty much, like you said, no lenders are giving out an offset account for a fixed loan. So very important to note that. So you mentioned the credit card earlier before, saving money. Do you want to talk about it or not? Do you want me to talk about it? I'll talk about it. So, we did mention that earlier. You can get a credit card, and you can theoretically save money. And how that works is your offset account. You want every single dollar that you make, whether it's rent, wages, dividends, salary, whatever, you and your partner, all the money that comes into your household, you want it to go into your offset account.
Yeah.
That's obviously so you can reduce the interest being paid on your mortgage.
And importantly, like you mentioned, the bank looks at the balance every night.
Correct.
To calculate the interest.
Yes. So when you've got money in your offset account and they're looking at it at a nightly basis, so you obviously want to have the most amount of money in your offset account every night. Mm-hmm. You want to have the most amount of money in your offset account for the longest period of time.
Yes.
For the entire month if you can. So enter the credit card, right?
Yeah.
So before we get into how the credit card part works, there's 3 really important rules. If you don't abide by these 3 rules, don't touch your credit card. Don't worry about it. Snap it in half and forget this part of the podcast exists, right? Yeah. So it's not your money.
Yeah.
Very first thing, it's literally credit.
Yep.
So it's someone else's money. So it's not your money. You can't go out and buy, $10,000 Gucci bags and stuff.
Yeah.
Unless your income allows it. If you miss your credit card payments, you incur a huge amount of interest.
Yeah.
And we're talking 20% plus per day missed, right? On certain credit cards. And the third one is you must be very strict with your payments.
Yeah.
And you'll see why those 3 pillars, I guess, of credit cards are important now. So I guess the purpose of the credit card is you want to use your credit card for purchases, your everyday purchases, just as you would your normal savings account or your normal offset account. So as we know, you can take your offset account, you get a card, you go to Coles, you buy some toilet paper, you buy some noodles, whatever you can grab your hands on
whatever
at the moment.
You can hoard.
That's it. And you can use your savings account or your offset account as per normal. Instead, what you could do is use your credit card to do those purchases.
Yeah.
And you do that throughout the entire month. And instead of losing $20, $30 per day through random items off your offset account, it's all compiling into your credit card.
Yeah.
And that way, every single night, your offset account is still at its peak.
Yeah.
So you still got $100,000 in it, not 99,980.
Yeah.
And then every day it doesn't go down. It stays at 100,000.
Yeah. So you're effectively taking advantage of the time value of money.
Correct.
So you've got, let's say, 45 days to pay off your credit card.
Yeah.
So for those 45 days, instead of pulling money out of your offset account every single day or not putting your wages into your offset account so you can use it for those expenses, you pump all that money into your offset account, and that money is better used there for those 45 days to reduce your interest and then you can pay off your credit card after those 45 days before you incur any interest on your credit card. So that's the notion of the time value of money that you'll be taking advantage of. And when you do that consistently, every single fortnight or every single month for the entirety of the loan, you'll be surprised how much that can affect the length of your mortgage.
Yeah.
And in some cases, it can bring it down by 2/3.
Yeah.
So your 30-year loan can be paid off in 10 years in some circumstances if you just abide by this principle and take advantage of the time value of money.
Yeah, for sure. And obviously, with cutting down your loan time, you're cutting down the interest you're paying. And so
Yeah.
and this is why we say your credit card could be saving you money. However, it is imperative, at the end of the month, you pay down the full amount
Yeah.
owing on your credit card and that's through the funds in your offset. So one day a month, your offset account will go down a little bit.
Yeah.
But you got to remember that credit card money is not your money.
Yeah.
And you can't be holding on to it and waiting for the next month and 55 days. None of that rubbish. 30 days, you pay your credit card off every single month.
Yeah.
As soon as you've gone over a day, the whole purpose of having a credit card
Goes out
it's out the window because the interest is so high.
Yeah. And I think this one point in the show notes just summarizes it perfectly. Must be strict AF with payments.
When I saw that, I tried not to laugh when I was reading it out. But yes, must be strict AF with your payments. There's no two ways about it.
Yeah.
You can also set an auto sweep on your credit card for most major banks.
Yeah.
So that the payments happen on its own, and you don't risk missing a payment, anything like that. But using your credit card, and maybe I'll get maybe I'll get an example on our socials to really show the impact dollar-wise.
Yeah.
But it can really save you tens of thousands of dollars. And right now with Corona, COVID, we need to save all the money we can.
There's also a bit of a tax benefit that some people may not realize to using your offset account as opposed to a regular savings account. So with a regular savings account, you earn your wages, and that's considered your after-tax income. So you've got your gross wages, you pay your tax, what ends up in your pocket is your after-tax income. So you've already paid tax on that income. Then you use that after-tax income to put it into a savings account, which earns you interest. Can be said the interest rates are pretty low at this stage, but either way, you're going to earn interest from the money that you've put into your savings account with your after-tax money. That interest that you earn from the bank, as negligible as it may be these days, is assessable income. So you've used your after-tax income to put money into your savings account that has earned you interest, which you have to pay tax on again. Now, if you were to put money in your offset account, let's say your savings account will earn you 1% interest, 2% if you're lucky these days.
Yeah.
But your home loan is, let's say, 3% interest.
Yeah.
So are you better off earning 2% interest from your savings account that you have to pay tax on, or would you rather save 3% interest on your mortgage?
Correct.
So for me, an offset account is a much better way to save your money than putting it into a savings account.
100%.
So something else for people to think about if you've got a separate savings account.
Yeah, heard it here first on the First Brick Property Podcast. Taxman, every episode, he surprises us with some tax advice.
As always, speak to your accountant and your financial advisor. This is not financial advice.
He surprises me with this stuff because it's not in the show notes. It just pops up out of nowhere. But that's definitely good. Yeah, good point. You're literally saving money, more money than you'd be making. So you literally lose nothing, and by just setting up your offset account. There are two types of offset accounts. Just to be wary, there's one. The first one is 100% transactional offset account, and the second one is a partial offset account. It literally just means the 100% offset account means every single dollar and cent in that offset account offsets your loan, and the partial one is partial, depending on what the agreement is, 50%, 30%. So don't waste your time with a partial offset account.
Yeah.
Just go straight for the transaction offset account, the 100% one. How do you get one?
Ask your broker.
Yeah,
is the short answer.
Pretty straightforward, isn't it?
Yeah.
It's as simple as asking your broker or the bank.
Speak to your bank, whoever it is that you bank with, give them a call.
Yep. And you just say, yeah, I want a offset account.
Yep.
Pretty straightforward. If you've already got an existing loan and you don't have an offset account, you can still apply to get one.
Yeah.
So you can set that up, and this is the time to do it. Put all your money in it. And you'll be saving a lot of money. You'll be surprised at how much money you save.
Just keep in mind the difference between variable and fixed rate loans. A lot of the very tempting interest rates that are out in the market now are for fixed rate loans.
Yeah.
So keep in mind for those loans where the interest rate is so low, if it's fixed, you won't get the benefit of an offset. So just keep that in mind if you're refinancing or if you're going to ask for an offset account.
Yeah, for sure. Do some modeling and see which one's worth it.
Yep.
More worth it for you. So there is something else that can help in your interest reduction. It's called a redraw facility or a redraw feature. Most people don't know what it is, I guess, or a lot of people think it's the same as an offset account.
Yeah, at one point I thought the same thing.
Yeah. So you may have heard of a redraw facility, and essentially it's a feature which enables borrowers to withdraw money that they've already contributed to paying off their loan. So if my regular repayment for the month is $1,000 and I've paid $2,000,
yep,
I've paid an extra $1,000, and I can redraw that $1,000 upon request.
Yep.
So the balance of the facility consists of whatever extra payments the borrower has already made towards paying off the loan.
Yep.
So in many ways, the redraw and the offset are very similar. And the main difference is that the money sitting in an offset account remains at core and very easily accessible.
Yep.
Literally, I can go to the ATM, pull out cash. I can go Coles, tap and go, can restaurants, whatever. I can use it all the time, anytime, just like a savings account. Whereas the money in a redraw facility, while it is accessible, it's not available for same day at core. You can't just go and pull out your money whenever you want. You have to actually give the bank a ring, fill out some documents, or just let them know. It depends on the system the bank has. And it takes some time to actually get the funds. And there is sometimes a redraw fee associated with redrawing money from your loan.
So if you want to save your money, but you think you're a bit of a spender, a redraw is probably the way to go.
Yeah, correct. The other one that's probably like the only other time you might use a redraw over an offset is if you want to actually pay down your loan quicker. Because the offset will only offset interest. It won't offset principal.
Yeah.
Whereas your redraw account, if you've made extra payments, you've actually reduced your principal as well. So it reduces your principal.
Yeah.
But I think the offset account makes more sense in most situations.
Yeah.
But there are definitely times where you would want to use a redraw instead. You want to sum up for us?
Yeah. So very quickly, offset accounts are like everyday transaction accounts, giving you easy access to your money. Redraw facilities let you access extra repayments that you've made on your home loan. They can both help you reduce the amount of interest that you've paid on your home loan. And how you use them depends on your circumstances and how you prefer to manage your finances. Again, this is where it's important to speak to your accountant and or your financial advisors. There may be different tax implications for offset and redraw if you decide to rent out your home.
Wonderful. Any parting comments on this episode? Anything else that we've missed?
No, I think everybody just needs to look at their own personal circumstances and really sit down and look at your finances and the size of your loans and what you think the size of your offset account will be, and just go from there and seek advice if you need it. Yeah,
for sure. And if you've got if you're trying to figure out how you can work out your loan repayments and how much they're going to cost you and whatnot, there's a fantastic app on the Apple Store and Android and all the stores called the Property Calculator Australia app. So it's a free app, and just put in your loan amounts and whatnot, and you'll see how much you owe, and you can figure it out pretty quickly.
Sounds good.
So it's a great app. But thanks for everyone that did listen. If you do have any questions regarding offset accounts or redraws, please send them through, and we're happy to help sort that out for you and give you a hand. You can find all our content on our socials: Facebook, Instagram, YouTube, LinkedIn, TikTok, everything. Just search First Brick Property. And if you have any topics you want discussed, like what we did today, or any questions, send them through at hello@firstbrick.com.au or shoot us a message on our social platforms. If you enjoyed the episode, we'd love a review. This helps us get higher up in the charts and allows more people to find us and listen and learn. So we'll take 5-star ratings, please. Leave a comment as well if you want. And pass the pod. Let one person know that you think this podcast will help, and we'll pass the pod. Buying property is our... Oh, I forgot what it was. Buying property is our passion. Helping you do it is our mission. Thanks.